Hello everybody, in this video I'm just going to be doing a brief stock analysis on Twitter, and this is not by any means going to be a deep dive into their financials, but more so me just giving my opinion on the company as well as the outlook for the industry. So first off, I just wanted to take a look at their 5-year chart here on Yahoo Finance, and I generally like to do that just because it gives more of a long-term growth perspective on the stock. So what the 5-year chart tells me here is not a great story for Twitter. They were at $28 about 5 years ago, and then they declined a little bit, and then about 3 to 4 years ago, as they became more profitable, you saw the stock really climb, and then for the last about 2 to 3 years, it's been really steady, back up to about $40 now. Back up from $20 at their previous low in mid-March when the overall market was down, but they weren't terribly affected compared to some other industries, with their previous high being $41, dropping all the way down to $20. Sounds bad, but it's affected as some airline and cruise line and hospitality stocks were. They didn't get just pummeled. But the stock has recuperated to about its previous high, but the stock has not really grown much as a lot of tech stocks have. Tech stocks have really been on a tear the last couple of months, which Twitter has not really seen. And next up, I just wanted to show their revenue and earnings. So here, year over year for the last 4 years, you can see revenue kind of steadily increasing, especially in 2017 to 2019, as well as earnings being really attractive here, with it being really negative in 2016, marginally negative in 2017, and then really great gains in 2018 and 2019. And then here's their revenue and earnings, and I actually did not know their earnings were going to be this terribly negative. It's from something called a non-cash tax asset, I believe it was, but it was expected, so all the institutional investors were completely expecting it, so the stock price was not terribly affected. But as you can see here on the first bullet, they did slightly miss on revenue. Earnings were as expected, but they did show strong growth in users, which has been in a bit of a slump lately. In the last couple of years, or I guess really 2 years ago or more, they were seeing double-digit growth every single quarter, or every year, sorry, and now that has really slowed down to just single-digit growth. And then the second key point here about their earnings is that they have moderately recovered their business compared to March and the fallout afterwards, but ad revenue is still down 23% from last year. And then just the last one is that right now Twitter is suffering from hack compromises, and really all the social medias go through this. I think Facebook was just going through something similar just 6 months ago, so it just happens. And then next up, I don't usually take a look at this, but I just thought it was kind of noteworthy here on Robinhood. 39 Analyst Ratings rated the stock 72% at a hold, and I would actually completely agree with the hold position, just because it's not really a sell yet, but I think there are much better investments out there, so I really wouldn't buy into it either. And then next up, I wanted to talk about some bearish and bullish points here about Twitter. So first up, I want to take a look at some positive points here by analysts at Morningstar. And the first 2 points I actually do not think are really strong ones, but here taking a look at the first one here, investments in product enhancements and video content could return monthly active users. And from what I understand, these enhancements are pretty minor, so I would not expect it to have any kind of major effect on the number of returning users. And then the next one is the deal with the NFL to live stream Thursday night football games and provide the platform for interaction and conversation about the games may also return more users. Don't know if I necessarily agree with this one either, just because it seems like everybody's doing this. Disney has ESPN, CBS All Access has live games on Thursday night, and I think Facebook has something in the works. So don't really see this being a big play either, just because it seems like everybody is doing it. And then the last one is growth in ad revenue per user remains strong, which is absolutely key for Twitter because their overall returning users and new users are slowing down. So growth in ad revenue per user is absolutely key. And next up, I wanted to take a look at a few of the negative points by analysts at Morningstar. The first one being, as Twitter's user growth decelerates as it is, advertisers may allocate much less of their advertising budget to Twitter, which is really worst case scenario for Twitter, because they are still seeing some new users, but if advertisers pull out because they're not growing as fast, that's going to really decrease their revenues. And then the next one is the emergence of other social network companies such as Snapchat Snapchat, and Snapchat's already really big and already been really popular for at least 5 years now, but I think what they mean is that they're starting to actually make a lot of money now, so it's going to look a lot more attractive to advertisers. So this could hinder Twitter's user base, and I think even moving forward, as there will be more social network companies out there, this will further hinder their user base. And then this last point is really not a good one. It doesn't make any sense to me, but any downturn in the overall online ad space will have a significant impact on Twitter, and although that's true, I can't really see any reason that would happen, so just kind of disregard that last point. And lastly, I just wanted to show the research report overview. Morningstar rating is 3 out of 5 stars, which I guess I agree with. I would say even just 2 stars, just because there's other better investments in that same industry. And then economic moat, none. They have a really strong brand, so I'd say they at least have a narrow economic moat there. Fair value at $33, and they're already at $40 right now, so that kind of hinders them right there. And then uncertainty very high. I would say I disagree with that quite a bit, just because they're so already well established and they're not going away anytime soon. And then stewardship standard, I actually love Jack Dorsey. So I think he's really great leader, but a lot of people disagree. And something really interesting they could do as their growth starts to slow down is maybe in a year or two start to declare just a really small dividend, or even do a share buyback to kind of help investors out. Anyways, I make tons of other brief stock analysis videos very similar to this one, so be sure to come and check those out if you did enjoy it. Subscribe for more content, and thank you so much for watching.